Hey, welcome everybody to the 40 Finance channel. Doing just a live stream today. Thought I'd share some news headlines on stocks that I follow. There's a lot of news going on across the stock market besides the same old, right? Economy, this and that. As we head into the fall, you'll see that businesses in general, the business news starts to ramp up. So summertime in a corporate atmosphere is kind of hit or miss because so many of your employees take time off. You have holidays and whatnot. And then you start to get into back to school, which is crazy for everybody, at least those who have kids. So October is kind of a prime business month, in my opinion, where you'll see the velocity of, let's just say, announcements, right, start to come out. And that, at least with the stocks that I follow, that's exactly what I've been seeing. So I thought I'd share some of those with you today to kick off this live stream. And then obviously I'll click through the questions and everything too. Derek Ridlin has already chimed in to test the comments. I appreciate that. And since it is Derek, who also likes Intel, or at least formerly liked Intel, I have a pretty interesting one for you today, Derek, if you're still here. So this is from Seeking Alpha. This is the TSMC news that I mentioned in the title screen. Now this, I'm gonna call this news, but to be fair, this is reported by an individual. All right, so unlike CNN, whatnot, this is an individual, so we might need to do some more research. But it really captured my attention. I saved it in the inbox, in my inbox, to look at later. And what the TSMC has said is that they will move to 2 nanometer chips in 2025 compared to 18A for Intel. Now, I don't know everything about Intel, so I'm not going to pretend to. But Derek, what's interesting here, if you're still listening, is this last one. This means Intel will regain process leadership. 20A will likely be only slightly less dense than TSMC's N2, but could launch a full year earlier in the market. Now, this is big for a lot of reasons, and the biggest reason, in my opinion, is this: that Intel's been thrown under the bus for a few years now, arguably rightfully so, because they've just struggled to get certain things off the ground. But if there's any merit to this Arnie Verheide, or however you say his name, Intel has the potential to take over process leadership maybe in 2024 is kind of what I'm assuming here. They'll move to 2 nanometer in 2025, so that's TSMC. My guess is that Intel's ahead of that, is what it appears. So there's a lot to dig in. This gentleman has a thesis, talks about the 2 nanometer delay. Let's see if I can find something about Intel, because to me the delay is only relative to the competition, right? The delay by itself isn't such a big deal, but the competitor roadmap changing certainly would be. I'm not going to, okay, here we go. Guys, I haven't proofed this, so I'm just going to read it out loud. Effectively, 2024, Intel will be competing with its 28 node against TSMC's N3E. And in 2025, Intel has 18A. It will be ahead of TSMC's 2 nanometer. This means Intel has won the marketing games for the next few years. Second point, 2 nanometer will be most competitive in performance and transistor density, going beyond the marketing number. One could extrapolate and conclude that TSMC's 2 nanometer should have a density. Okay, that's beyond my understanding. For Intel, the analyst is a much murkier, since Intel 4 density isn't even known yet. Nonetheless, you know, it's a headline number. I'm not going to dig too far into the technicals because it's not fair to you guys because there's just so much learning and experience that goes into these semiconductors. But when I saw that there was potential for Intel to take over a leadership position in terms of size and speed, that's big. Now, again, that is an independent person writing. Somebody smart like Derek and myself will take this as a sort of a brainstorm, right? And we'll take it as intriguing. And then we'll just have to keep reading and see how far it goes. But that is TSMC headline number one. The second one, if I can bring it up here. That's big, and this is bullish. Much, I would say, the last headline was, of course, sort of mixed if there was extended delays. But unconfirmed news reports that TSMC is building a plant in Western Japan as a joint venture with Sony. That is confirmed. Computer chip factory in Japan. The company did not disclose about the joint venture. So this is good for TSMC. And as I've said many times, particularly here lately, the China threat to the country of Taiwan, that's a political discussion. I'm not going to get into it. Let's just keep it at that it is a threat, and it is something that concerns me as a TSMC stockholder, although it's, it's a percentage of my portfolio. But what I love what this company is doing is moving into places like Japan. I think they have a factory in Germany, either building or built. They have big plans for Arizona here in the U.S. This is how you spread the wealth a little bit. And funny enough, in a diplomacy sort of game, you can win friends, right? Because there's a chip shortage. TSMC is arguably the best at what they do, at least right now. And so when you bring that kind of business to a country, and let's just say that you might need help down the road, it'll be interesting to see if TSMC makes new friends in that regard. All right, let's go to DraftKings. So a lot of cool stuff coming out. I'm just getting this ready. In the gambling space, we are starting to see the tide, I don't know if I was going to say the tide turns, but we are starting to see the sort of big growth in sports betting. And New Jersey, the reason New Jersey is so important is because New Jersey is a mature market for sports betting. So everybody kind of breaks down what New Jersey's doing because it gives you a glimpse at the future. And when you look at things like FanDuel's investor report, a lot of their predictions of profitability and revenue come off a projection of the New Jersey market. So it's always interesting to see where that's going. The state of New Jersey set a new sports betting record in the month of September with $1 billion in wagers. The record came with the return of NFL and college football. So that's a real record because they were open last year and I believe the year before. First state to hit $1 billion. Online gaming revenue hit a record $453 million in the state for the month of September. Previous sports betting monthly record was almost $1 billion. And what do we got here? Football wagers represented $400 million of, if I'm reading this correctly, the $996 million, followed by baseball. Now let's get down to the DraftKings slash other competitors. Winners and losers. Gross gaming revenue. Okay, so that's the taxable amount that these companies pay. Was $82 million. So $1 billion in money bet, $82 million in revenue up 82% year over year and just shy of an all-time high. The leaders, let me make sure this is centered in the screen. The leader was Paddy Power, working as a combination of entities, right? So it's the combination of Meadowlands, FanDuel, PointsBet, and Superbook with 36 million. That's Flutter Entertainment / Paddy Power. My understanding is that FanDuel may come in as a standalone stock, perhaps maybe next year. But ultimately, if you don't mind investing abroad, you could also get in Paddy Power on some of the other markets. DraftKings, which is why I'm interested in this. DraftKings, who operates FoxBet as a branded partnership, they were second with 13.2 million. So two properties, sorry for that thing that keeps popping up. Two properties at 13 million. FanDuel had 1, 2, 3, 4, and had 36 million. Okay, so you start to see with this why DraftKings is getting their nose and buying other places, because a standalone brand doesn't really feel like it's going to win the race by itself. But partnerships like FoxBet, we're kicking around buying Etain or Entain, whatever. You could see more of that. BetMGM, which I would say, I haven't looked at that stock in a while, but if you are not in this sort of mobile sports gambling, BetMGM or MGM stock might be a good place to look, in my opinion, because they came in third with 11 million, only a couple million off of DraftKings. Granted, this is just New Jersey, people, so keep that in mind. This is not the United States as a whole. Barstool and Penn, fourth at 4.1 million in gross gaming revenue. So Paddy Power, big time winner, 36 million. DraftKings and BetMGM, sort of neck and neck to some degree, and then Barstool quite a ways away. Here's the good news if you're DraftKings, if you're Team DraftKings. Golden Nugget Online Gaming, which is set to be acquired by DraftKings. Let me tell you what I'm talking about first. BetMGM led the way in the online casino market with $38 million. Online casino market being blackjack, slot machines, not sports betting, right? Not sportsbook. So BetMGM raised $38 million, I assume, in gross revenue. That is compared to the 10.8 million they did get in sportsbook revenue. So doing well there. And look who was second. Golden Nugget Online Gaming, 31 million. DraftKings is acquiring GNOG. I'm not sure when that exactly that will get approved, but it is important to know that this acquisition game could pay off. So if you've heard me talk about DraftKings, you know that I like the sports book. I think it's great, and I think that there's growing opportunity there. DraftKings is not a cheap stock. There is zero outlook for profitability, certainly not a fundamental play. But when you start to think about what they call iGaming or online gaming, which is, the poker, blackjack, casinos, whatever, that is much more profitable for the house, okay? Much more profitable. And while the sexy thing is the sports book that you see in all the stock chats, DraftKings is making a pretty big footprint with iGaming on some of their acquisitions, and that to me is what will help the stock in the long term. So I just wanted to bring that up. All right, I also promised a Zillow update. This one was a little bit bigger, so I'm sure you guys saw it. Actually was a buying opportunity for me. Let me get to the headlines here. Right there. Zillow to pause home purchases. This is their iBuyer kind of program after building up a backlog. Do the bullet points. Following a Bloomberg report, will not purchase homes for the rest of the year as it works through a backlog of properties. They acquired more than 3,800 homes in Q2, but we are beyond operational capacity in our Zillow offers business and are not taking on additional contracts. Finding workers for iBuying has been challenging. The company stopped buying homes in the early days of the pandemic and took several months to resume, which they did eventually do. Despite a significant drop in the stock this year, Zillow is still too rich. Oh, okay. That's an opinion piece that they're linking to here. All right, so I'll share my opinion on this news. The iBuyer, the Zillow offers, whatever the hell you want to call it, was a losing entity for the business. It did not post a profit. However, the assumption was that as year 2, year 3 start to come through and you're actually closing on the things that you bought, then the profitability starts to build, right? There's no way to do a business like this without capital outflow heavy in the beginning because you have to buy all the homes. And there's no other way to get a home unless you buy a home. And then, the fixing up, the remarketing, and whatever, the cash finally starts to come in. But you got to have a pretty big inventory of homes to help that profitability march through, right? It just makes sense. You can't do it with 5 houses. And like they said, they had 3,800 homes during Q2. So they were building an inventory that I believe could churn a decent profit. The last thing I saw in their investor presentation was the fact that about $10,000 to $20,000 a home profit margin was being made depending on the cost of the house. So the funny thing about this hitting the stock, and it did, let me see if I can show you a chart here. It hit the stock hard on Monday. I don't even know what day it was. Who cares? Right here. That was Monday. Or no, that was Monday, October 18th. Okay, so yesterday dropped from $94 to $84. And yes, sir, I did buy on that day. I bought just 5 shares for now. I bought another 5 shares today. And we see that it's already coming back up closer to the 90s. Maybe I'll buy 4 before it hits 90. Just trying to work my way in. But think about this. If you had a non-profitable business arm that's going to stop buying properties, right? You're probably going to see Zillow's EPS rise beyond guidance numbers. And most people just read the numbers, so they won't even know the story. And boom, Zillow suddenly will have a better EPS. So I like the move. I don't even care about the backlog. I think that it's a prudent move during this current real estate environment with or without the backlog. So I'm still a buyer of Zillow after this news. All right, those were my big news headlines, and I'll chime in here and see if anyone, so Derek did confirm he's still here. He's still on the Intel train. Alibaba, he went in and got Alibaba is what it's saying here. I haven't looked at Baba in a couple weeks. You have to foresee that the negative headlines, I feel like they've got to be passing soon. It's just this, I'm trying to make this a little more user-friendly here. It's always hard to tell with China. Are they done slapping wrists? I don't know. But it is hard to argue the value opportunity of Alibaba at 176 when you figure even January of this year, it was $60 more. And now that they're done with their penalties, I assume they're done with their penalties, or they will be done, or the penalties are, how should we say, noted on their earnings projections. And so you have a stock, if you hit, let's just call it, this will go up to about $11. You know, you've got a forward PE of 17. It's pretty good. You also will not see a lot of stocks at double-digit EPS, right? Growth, 20%, and I'm sure everybody who's calling estimates at this point are undercutting their estimates. Like, there's a negative sentiment, so the EPS and revenue growth are going to have negative connotations. That's what you might see there. But Alibaba, certainly interesting, maybe particularly interesting when so much of the rest of the stocks are inflated. Now, I'm holding to my guns and not buying single stocks, single Chinese stocks anyhow, but I can understand the value of Alibaba, and that would certainly be the one that I picked out of all of them, if I did go there. Kevin Hawthorne, how you doing? Good to see you. Mark Zuckerberg, do you still have Bitcoin or GBTC? No. I am working on a small side crypto play, but right now I'm just putting literally a tiny bit of money off to the side, and I haven't established it yet. I will. I've bought some Ethereum. I'll tell you that. I'll share you the whole thing when it's worth talking about. Frankly, it's so small. With GBTC, you know, there's been news about the new Bitcoin ETF that's coming out that's based on futures contracts. I'd have to stare at it. The expense fee is technically less than GBTC was. I liked GBTC as a product. It worked very well for me for the couple years that I held it. Never had problem with liquidity. I never had problem buying or selling it. I did only take my profits this year because I wanted to balance off some profits with some losses that I took on other stocks. So I would still say I'm generally positive on GBTC. However, with all the new applications that are available today, I don't know if I'm going to hold like Bitcoin, digital coins, but I am going to use a service to buy cryptocurrency directly instead of using a stock market ticker. But it probably won't be the pure digital wallet play, right? And nothing against that. I just I don't know. I just don't know what I'm doing, and I'm not buying it as a utility. I'm buying it for an investment. Derek comes back in on Baba, always traded at a value because it's Chinese, but even then, this valuation is dirt cheap. You're getting their new cloud service for free. And see right there, I didn't even know that they were pulling out a new cloud service. I knew about the Fintech that is got pushed off to the side. I'm sorry, I forget it. The name of the one that they almost launched, and then everybody... China came in. I'm going to get it for you in 1 second here. Ant Financial, okay? That was Jack Ma controlled Alibaba-backed fintech company, Ant Financial, which seems like it sort of sparked off this whole thing. And that was way back in November, December, January, I can't remember. They were going to launch it, then that got pushed behind. Then this sort of data defense started by the government. But if you got the stomach for it, Derek, which it sounds like you do, and you're not the only one. I'm probably one of the most averse people that I know to Chinese stocks as individual holdings because of something like this. Now, the one thing that I would, if you told me I had to buy something, right, or the prospects were so good I couldn't stand it, I would probably buy the KWEB ETF, which is just Chinese internet/digital based companies. So Alibaba, Tencent, all those kinds of internet ones, Baidu, etc. That would be the one that I bought. Very similar to FDN on the USA side, if you will. What is the best fintech stock? So it's not sexy, but I'm a huge PayPal proponent, and I think that they have more room to go. I've mentioned on this channel before the intriguing part of SoFi, and it's past it now, but SoFi, very rarely does Morningstar offer a fair value on a stock like SoFi, and they had a fair value of $17, which I thought was just absolutely shocking. So there was a game with SoFi that I almost played, but I didn't. Square versus PayPal, I'll take PayPal every day. Who else we got? Let me type in some names here, and I'll tell you. Fintech stocks. Just showing you what I'm doing. Top fintech companies to invest in. This is close enough. Square. So it looks like Motley Fool has Square as number one. I do own Square, but I like PayPal as number one. Goldman Sachs, I think that's because of Marcus. They also have the Apple Buy Now, Pay Later credit card, I believe. Green Dot, I don't know nothing about that. Mercado Libre, so this is an interesting one. I stare at this stock all the time, and it's settling down a little bit. They copy just about everything that Amazon does. But they also do have a fintech element. It's an intriguing play for sure. It's not cheap though. Let's see. Those were the top ones that they gave. And I also mentioned SoFi in there. Now that game of what Square and PayPal, not so much SoFi, the sort of one app fintech / digital wallet world, that is going to be so competitive going forward. And Square and PayPal are lucky with Cash App and Venmo. They're lucky that they're so far ahead. So I would definitely pick one of them, because I just saw a TV commercial the other day for some other app. I don't even remember the name. And they're doing banking now too, where you can direct deposit your paycheck into this Go app or something. And it wasn't a traditional bank. So that world is really going to start stepping up. I think PayPal and Venmo, that sort of peer-to-peer thing, is going to be the ultimate driver. Can they figure out a way to do wallet to the same degree that Google and Apple have? I don't know. It'd be nice if you put Google Pay and Apple Pay into what PayPal and Square are doing. I think the race is over. I think they've got it, right? But that's not here yet. So you always have to worry about Google and Apple to some degree being able to come up with something similar. But fintech is a lot of things. You could go down loans on fintech, right? I hold Rocket Mortgage, and many people joke about Rocket Mortgage to me, and with good reason. From a performance to date standpoint, I think Rocket Mortgage has an opportunity to have a fintech-like loan platform going forward. We'll see if that's right or wrong, but it's going to take some time in the mortgage game, I'll tell you that. Do you have any recommendations for Zuora at the current price? Is this the subscription platform? If it's who I think, it's either a fashion retailer. Yeah, okay. Now this is, sorry, you can't see that. it's an enterprise subscription platform. And I can see that it's not fitting very well on my screen, but you get the picture. So people who, let's say, have enterprise level subscription would be something like, well, hell, we're on Yahoo Finance, right? And they offer a subscription. Whereas, you know, a dink and dunk thing would be, shucks. Just like a simple website builder, let's just say GoDaddy, okay? You could probably do subscriptions on there. Zuora is going to be more robust. It's going to give you more opportunity to remarket to your followers, etc. What do I think of the stock right here today? Considering I haven't studied it, but you get an inkling of profitability next fiscal year. So forward PE, about 100, right? Yeah. Forward PE of 100. This part is promising, and you don't see it very much in this day and age. All right, so you've got 11% growth, call it 12. And then next year, from a projection standpoint, you'll grow slightly more than this year. And good luck finding stocks that will do this in a declining growth pattern. And I'm talking about the economy. 12%, and I know it only goes up to 14, but that's pretty impressive. There's not too many stocks that do that. Let's see how long we've been around here. This is your annual valuation metrics. I guess we'll have to goof around with price to sales. You know, it's slightly higher than it was. You're talking about a point. Price to book, maybe slightly higher. Short term, I would say hold out for the best possible price if you're bullish on whatever you think they're going to do. You know, it's only $300 million that they're bringing in. If you want it to explode, they're going to need a much bigger plan than that. Coinbase, wish I would have bought it at below 250. But I still struggle with the race to the bottom with their fees. It's at 304 today. I like Coinbase as probably the dominant brand in cryptocurrency from an old person's point of view. Old person being me. Investors at my age or near my age, the recognition and the trust factors that you get from Coinbase are huge. So I like that. The race to the bottom, which is not, they charge X amount of dollars for each transaction. How long can that last? I don't know. But I would take it at a certain price. And oh, by the way, they have a positive EPS, which is big. Renegade for life, thanks for sharing your knowledge. Thank you for coming to the live stream. Fintech is hard to predict except for cheaper, faster, better. That's what Chestad says, and I agree. And I think along those points of cheaper, faster, better, you can't go from nothing to gigantic in fintech. And I think that's what made Square, an interesting stock during the pandemic because of what happened with Cash App. And it literally did go from nobody, small merchant business processing to Cash App explosion. That was probably a once in a lifetime path that they've got. And now they're in and they're good, right? But they skipped a ton of steps that most fintech companies would have had to take. So it doesn't matter what I think. I think you stare very closely at Square, PayPal. I'll throw Visa in there too. I know there's no Cash App, but keep learning about their payment rails system. And then maybe a Google or an Apple. One of those, in my opinion, just has way too much money. They all have way too much money to pull it off. And I would say PayPal and Square have actually, they have a proof of concept out there that's working. With Venmo, Square has even more with their banking and their trading platform. PayPal's been kind of slowly going that way, but you know, they're bigger companies, so they have a lot of testing to do before they release. I could be wrong about Goldman Sachs, but I just don't see it. I don't see it because I don't think, I think the brand for Goldman Sachs is probably too premium to ever get widely adopted. And that's crazy, but it's true. I just don't think people at the lower end of middle class and below are even going to trust Goldman Sachs because of the people who have theories about stock market, stealing money, etc. That's just my take. Facebook stock is a steal unless you believe political risk. I do not believe in the political risk. The steal part, I think Facebook stock was a steal earlier this year. Even in the summer, let's see where we're at. I mean, they are churning EPS like nobody's business. Look at this EPS, $16. It's crazy. And you still got 20% revenue growth next year. You know, this is why FANG stocks are still popular. This is why everybody says, you know, who thought FANGs were going to go away is still staring at them because this is the kind of EPS they produce. Let's take a look at metrics over time. Forward PE at 20. Yeah, this 2018 number was during the Chinese tariff threats that ended that year, I believe, if I'm remembering correctly. So take that with a grain of salt because it was a down market. You know, I don't think it's jaw-dropping on sale, but it's got a lot of good things going for it. I think the next, let's just say 5% overall market correction, you know, maybe you add now and you keep looking for lower prices. That's what I'm doing with Zillow. This PEG ratio is very attractive. Anything below 1, which is hard to find, is good, and you're at 0.83. Price to sales under 10 by a mile. Yeah. And here's the thing. Let's see if it shows up here. Facebook, sorry if I'm giving you a headache. Revenue, $100 billion. You want to see something crazy? Cash on hand, $64 billion. Total debt, $12 billion. I don't know. You know, they're not going bankrupt. That's the only thing I'm going to say. They're not going bankrupt, and they could buy a couple small countries while they were at it. So you could do much worse than Facebook, that's for sure. All right. Can we buy AT&T stock? I'm sorry. There's just nothing in AT&T for me. It's just not for me. But good luck. And I know that I assume they have a dividend. Good luck. I hope it works. It might as well be IBM to me. Derek, Facebook is a steal. A lot of people supporting it. I came up across a company called MetaFast. I think I've seen them. That is like nutritional supplement for weight loss. Not a small company. 2.3 billion. This is not a penny stock. Are they still doing this? Weight loss. Sorry. Trying to show you what I'm reading, but it doesn't show up. So anyway, this is weight loss, okay? And without even knowing the story here, What do we know about January with New Year's resolutions? So I like the thought process of getting in this one way before January. Don't know a ton about it, but just eyeballing it, you got a 3% dividend yield on today's price. At $200 next fiscal year, maybe $17 EPS, 16% growth. I'm surprised this one, well, I guess pandemic, never mind. So it grew 63% this year. And then I would say that they go back to normal growth, which isn't terrible at 16%. I mean, whatever, there's worse. There's people who have negative growth. And then historically, trailing P of 15. We don't have forward, so there might be something goofy going on here in the short term. So just make sure you read about that. Price to sales, that's trailing. Just look ahead a little bit. There's a reason that this one's down. And the metrics, there's something going on with their forward EPS. And I would need to read more to figure it out. But this NA, when it clearly shows a projected EPS here, there's something weird going on that requires more attention. But good luck. I'm going to get a drink here. Chestad used PayPal today because I didn't want to use your credit card. Yep. I don't use PayPal for everything, but I do, I use it. You know, I don't know what else to say. It's kind of like Chestad just did. There's some things that I buy that I just want, that's connected to my bank account, whatever. And then obviously like Venmo, I use a ton, not because I'm 16 years old and trying to split movie tickets with my friends, but as a parent, there's always something stupid, right? Your soccer team goes out for pizza, so all the parents chip in. You want to get something for a teacher or a birthday, and people chip in. So I use Venmo all the time. Facebook always increases its revenue, but the percentage growth reduces by 10%. Yeah, I mean, as you get bigger, right, growth is harder. They will have to come up with something eventually, probably by the end of next year, to really keep investors, keep the growth investors' attention span. I think that the value/EPS investors, they're going to hang there for a long time because that's only going to go up. But $64 billion, which was their cash, you know, that's a good and bad. That's also a ticking time bomb because there'll be larger groups of investors who look at that and say, what are you doing? Like, why is this sitting in the bank? Why are we doing nothing with all that money? We have $12 billion in debt. We have $100 billion in trailing 12 months revenue. You need to do something. So you can't squirrel away money in the corporate world. You do to a certain degree, but in Facebook's world, you know, I could see the argument for maybe 30 billion in there, which would be more than double your debt load. But that means you got 34 billion that, in my opinion, is a ticking time bomb, and you got to come up with something to do with it. Same problem that Apple's going through, and I'm sure many others. Anthony, Global Global Foundries is IPO. If you like TSMC, I don't know. I'll have to look at that one. Aflac, the duck company. I haven't looked at them in a while. AFL. Insurance is interesting. So he mentioned Aflac. I'm not, I'm familiar with the brand. I'm not super familiar with the stock, just to be fair. So I'm going to talk out of my butt here a little bit. But we can see right off the bat that you have a PE under 10 in the trailing 12 months. EPS looks good. Dividend 2.39 looks good. Guessing that growth rate is a bitch. Yep. It's just hard to grow insurance companies. That's okay, because although this is a classic problem that some stocks are going to face next year. Undervalued by today's fiscal year's metrics, 567. Look at next year, though. You have less EPS and you have less revenue. So this one's setting up for a value trap if projections hold true. And that's the game. The game of if projections hold true, right? So you guys know that I'm all over projections from all over different sources. I always do Yahoo on the channel because it's just really easy to show you guys. But it also, I prefer the TipRanks data, and I feature that on the channel. It's just easier to look at Yahoo for you guys. All projections are not correct. All projections will not be correct. And if you are sneaky smart, you'll figure out whose projections that you have a different opinion for, right? So at the top of this show, Derek Ridlin was here. I'm not sure if he's still here. It looks like he is. So I'm not picking on Derek, but he's interested in Intel and he's bought a lot because he knows that Intel is down, stuck in the mud right now, but he believes they will beat their projections going forward. And the worst case scenario for Intel, he waits 3 or 4 years and they'll eventually get to the place that they thought they were going to get to when they started this process, right? So that's the bet. The bet is for any stock you like, and we can do Aflac, Intel, PayPal, who cares? If you see a bearish scenario playing out and the stock selling out, you just have to ask yourself if you believe the bearish tone, or do you have a reason why they will beat those expectations? You heard me talk about Zillow at 85 or something. As soon as that news hit and the stock dropped, whatever it was, 9% or 10%, I didn't even blink an eye. I was like, great. I didn't put my life savings in it. I was like, I'm definitely buying some here, because the only thing they lost was the losing side of their business, which was the iBuyer program. They didn't even lose it. They just paused it. So those are the kinds of things that people who have a passion for stocks that they kind of look for and think about. And you won't always be right. I'm certainly not always right. But hopefully that little example helps a little bit. And with that, Derek at an AVGO. This is Broadcom. Yes. All of these names, Broadcom is getting dinged because of weaker sales for next year, I believe. Let me try to bring this in. Yeah, so they dropped to single digits next year, which I think has some people concerned. But look at this EPS machine, 28 to 31. It's still positive, their revenue growth. And so I say if you study a semiconductor like Broadcom, like, oh crap, I'm going to forget their name. Let me get it for you. AVGO, ASML. That was another one I was thinking of. Anyway, all those put together, this is going to across the top of these. Sorry for pausing there. But anyone who's serving up the commodity-based semiconductors, right? So ones that are just kind of, yeah, there's a patent there, but it's loosely based. I think that there is tremendous over-analysis of semiconductor demand, and I think that there's tremendous bearish forecasts for it. I think that there's a lot of these companies like AVGO that are going to do great next year, and I think that there's opportunity. So, you know, for me, I'm sticking with TSM, and who knows if I'll add another one. Micron has been on my list for a long time, and their commodity, like, they sell nothing that's patent pending. And that's been the knock on them. But you look at their numbers, and it looks pretty incredible for next year. So we'll see what happens. But you have to have a reason why your semiconductor stock is going to be good, right? The TSM reason is super easy because it's just like the technology is hot. You know, they're doing like groundbreaking things. The only downside is, you know, China can launch missiles at them, right? Which is a pretty significant downside, to be fair. Some of the others, you're getting into commodity-based manufacturing. How much do materials cost? How much is the supply chain? Are you going to have undercutters? All those things rip into profits. So that's what you have to be careful about. If you enjoy stock market research, pick one or two. Okay, so Derek said Broadcom, right? I threw out Applied Materials, threw out Micron. Sure, there's a bunch of others. Pick 3 or 4, follow the crap out of them. And by follow the crap out of them, I mean go to whether you use Yahoo or Benzinga or Seeking Alpha, sign up for every single alert and follow them for 90 days. Learn about what they do and try to understand for yourself if they will beat their own projections, because if they do, things will get very, very good. All right, I gotta get close to wrapping it up here, guys. I'm gonna look for anyone. Did I get everybody? Thank you for checking Aflac. You have to watch those analyst projections. Yes, none of those analysts are too far off current price because they don't want to look like a jerk ass. Yep. This is true, and this just to give my free pitch on TipRanks. This is honestly where I spend our time. Let's talk about AVGO. And if you've watched my videos, you know I say this whenever I show you TipRanks. Trying to squeeze it in for you guys. Right here. So you can see the difference of this screen compared with the Yahoo one where it says like, you know, 12 analysts, and then it gives you a consensus. These guys go into detail. First of all, you get rid of the everyone, right? And you just stick with the people that TipRanks has a track record of. And then you can go back in and check their success rate. So this guy, Toshiya Hare, sorry if I've screwed it up, it shows you exactly what he said. And he goes back to 2017, buy, hold, hold, hold. So whatever, he looks good in that one. Here's Micron. He got dinged here, right? Hold, that's all fine. Buy on the way up. He kept buying. It kept sinking, and he dinged here, and he dinged here. Micron's hard, man. Incredible value buried in this company, but the headlines are killers. Every freaking headline's a killer. Not even that they're doing anything wrong. It's always an outside influence headline, right? Suppliers, price of goods, pricing margin. It bugs me. And that's why I have not bought Micron, even though I like it. All right, Kevin, I had a 16% growth and the EPS will go to 14. Oh, IMED. Okay, sorry, I didn't understand that. What is your take on Airbnb? Or is that Airbnb? Hold on now. I don't know what Airbnb, I'm missing it. Well, here is your ABB TipRanks preview. Hold. And these are getting kind of old. Your most recent 5 days is a hold. Sorry, I just don't know what that one is. Let's put it up on Yahoo Finance. It's driving me nuts now. Yeah, I don't know who this is. Sorry. ABB Limited manufactures and sells electrification, industrial automation, and robotics. Okay. Either way, not one I'm super familiar with. Sorry, Paul. Intel's pure value stock. I have a small account, so this is my favorite to sell covered calls. Cool. Anthony, you wheel. Okay, those two are talking to each other. All right, guys. I think I hit everybody. Hopefully some cool stuff that you might have learned today. Not necessarily advice from me, but just some of the headlines and some of the discussion, some of the things that I look at. Really appreciate everybody coming out, and we'll see you on the next video. Take it easy.